In this video, I am going to be putting in all of my options trade for the next 4 weeks. All of these will expire on the 14th of March, which is 4 weeks from now. I do have a long list here, and my trading platform is actually off screen because I need it to be on my second monitor in vertical mode so I can see all the prices. But what I'll do is whenever I execute a trade, I will bring over the ticket so you can have a look at that. With options trading, I am only doing trades once a month, and that's usually in the middle of the month. So I place all of my trades within 1 or 2 days of each other, and then I would monitor them until expiration. I would apply trade management if needed to, but most of the trade that I put in from last month didn't require any trade management whatsoever. First off, we've got the Swiss franc Japanese yen. So here it is. And the trade is going to be, I'm going to sell a call at 118, so up here, and then sell a put at 112. The idea is that in my analysis, this pair could be going into a range in the next 4 weeks. So 118 and 112 are the two levels that I have identified. As long as price finishes between those two numbers, then it will be a successful trade. So let's have a look. We're going to sell a 118 call on the 14th of March. 118. So here it is. 14th of March. This is a call, and we're going to be selling that. We want cash. Oh, gotta make sure I get the right position size. Yep, that's right. So there's the ticket. Gotta take a screenshot of that. These are all of my trades from last month, so we need a new folder, but for now let's just put it on the desktop. I need to sort all of this out into my trading journal. CSFJPY. Next, we're going to be selling a put at 112. With options trading, all of the trades that I'm selling as a seller, I would receive premiums up front. So this is 112, expiration 14th, cash, and call it 2. Next would be the Euro Japanese, no, not the Euro Japanese, Euro British Pound is the first one. For this pair, it's going to be a similar strategy. Price has been ranging for many weeks now, and I would think that it will continue to range unless we have a catalyst which make it move. So we're going to be selling a 91 put, which is all the way up here. It's very far away, and also going to, so I'm selling a 91 call and an 87 put, which is just right here. The call is actually a very good position in my opinion because it's very, very far away from where price is, way outside the 2 standard deviations of volatility. The put is a little bit closer than I had wanted. I wanted to sell an 86 put. I'll give you the, you can see here. So I wanted to get an 86 put, but there's no market there. This is one of the downside of trading options. Sometimes the trade that you wanted just not available. So this is the put side, 14th of March, and the furthest price I can manage is 87. Ideally, I would like to have an 86, which is right down here, because there is strong support level on a weekly chart right here. So by having a position beyond that, it gives me a lot more protection. Having said that, it's not available, so I will take 87 on that. 86.50 would have been nice, but again, not available. So selling this, checking, yes. Take a screenshot. So this is gonna be euro, British pound. Then on the call side, I had to be selling a 91 call. So here, 91 call, 14th of March. So that. Next would be Euro Japanese Yen. And a similar strategy here for the first two pair. Basically, my analysis say that it's going to be in a range, or most likely to be in a range for the next 4 weeks. So we're going to sell one call up here and then one put below. On the call side, we're looking to sell a 137 call, which is right here. So on the daily chart, we're right here. I wanted to get 137.50 or 138, but again, no prices is available there, so I'll take 137. Actually, that's incorrect. There is a price for 128. I'll just show you. So this is the price for selling the call at 138, and this is the price for selling the call at 137. Vastly different prices. And given the way price action is unfolding, last week we had a huge bearish candle. So I'm talking about this candle here. This one is still live. So given that this has happened and where price closed, I would be more inclined to take the 137 call than a 138, simply because the price difference makes this a lot more attractive. So we get out of that. 137, we're going to be selling that cash. So that. So this is going to be Euro JPY. I'm having to type around my microphone, so it's going to be a bit slow. I have a relatively small desk, and having the mic right in front of me means that I have to reach for my keyboard. 127 is the put side. You're having a look here. 127 is all the way down here on the weekly chart. On the daily chart, 127. So a fair distance away. And this is one of the beauty about trading with options. You can have positions at prices that actual price is never, it's not quite hitting there yet. But of course the trade-off here is you're doing it in the future. So it's not risk-free. The risk is manageable if, number one, you know how to choose your strike distances and you keep an eye out on volatility. So this is we're doing a put. We're selling that 127, 14th of March, cash. So that. Euro New Zealand is the next pair. Definitely has been trading in a range, as you can see. The way I set up my chart, I've got these 4 different lines, and the analysis is that as soon as price closes within the purple line on the weekly chart, it is most likely to range in the next 4 candles. Hence, that's why I'm trading my options 4 weeks out in advance. When it's above or below, it's bullish or bearish depending on how it goes. But as soon as it gets inside the middle here, there's a very good chance that if it closes in between these two purple lines, then it will continue to stay there until it break outside of that. So it's been doing that, and had I started trading back in December, would have made good money here because it basically didn't do anything. So for this pair, Euro New Zealand, we're gonna sell a call at 172 and sell a put at 166. 172 put us right around here, so quite higher than where price has been in the last, I'll say, almost 2 months. 172 on a daily chart is there. So yeah, you can see. So we're going to be selling a call at 172. Okay, there we go. 172 call, selling that. And then selling a put at 166. 166 would be right here. Would have liked to take 165, but it's not available because 165 would put it just underneath or very close to this the wick of this lower weekly candle here, which gives me quite a lot more protection, but closest we can get is going to be 166. So 166 is just right here. As you can see, I would have taken 165 because that would just put me right there below where I think is safest for the next 4 weeks. So 166 on the 14th, here it is. 166 put, cash, and we're selling it. Euro USD is the next pair on the list, and there is no doubt that price is going up. On the weekly chart, you can see clearly that buyers has been in control. Last week there was a pullback, but this week so far it looks like it could be testing and possibly breaking this as well. So could be setting a new high for the year. 125.45 is where price is at the moment, so it's pushing that. And the strategy here is I'm going to go for a bullish setup. So looking to sell a put at 127 and cover it at 124. So sell a 127 put or 1.27 put and buy back at 1.24. 1.27 would be up here, 1.24. And the way it's set up such that if I do these trade in combination of each other, I'm gonna have a break even at 125.60, which is right about here. So if price is above 1.2560 on the 14th of March, then that will be a successful trade for me. That's my break even point. So below that, I start to lose money, but above that, I'll make money. Here we go. And these option prices are rather expensive to buy and also to sell. So this is a good price to be dealing with at. 1.27 put and looking to be selling that. Euro USD. Need to buy it back at 124. So 124 put, cash. This is basically the stop loss of the position. If you are selling as an options trader, whatever you sell, you have to, at some point, you have to cover that. Now, in all of the trades that I placed before this, I haven't put in the stop loss as yet, simply because price is not available, and depending on where price goes for the next 4 weeks, it might not be available at all. So I've had trade where I continue to monitor it day after day, looking for that price to come up so I can put in my stop. But it was moving in my favor, so the market didn't really exist for that. So it's safe if there's no prices coming up. But if it's turning against you, then price will pop up, and that's when you can put in your stop loss at a slightly higher price than what you would like. So we're going 124 put 14th of March, and we're going to be buying that, so we have to pay money for this. We'll pay 63.5 USD. So once I put on all of my trades, I monitor it on end of day basis. It takes me about 15 minutes or so. British pound CAD is the next pair. This is quite possibly the most boring trading video on YouTube history. Right, so this pair is bullish, and there's no denying that in the last few weeks. However, going out on the longer time frame, I can see that there is possibly resistance coming up at around about 178.50 area, and this was the high that was made back in May of last year. So when price gets up there, this level may challenge that, so it could hold it there for a bit. It could might as well reverse a little bit. There is some protection, in my opinion anyway, that this level here will provide a struggle for buyers before they can break through. So even though this pair is bullish, I do want to put on a slightly risky short call at 180. Let's have a look. At 180 exactly. So looking to sell a call at 180, and my reason for this is that I don't believe the probability of this pair breaking 180 on the 14th of March is very high at all. It might push over that during the lifetime of the trade, but on the 14th of March, which is 4 weeks away, I think that the probability of it closing above 180 is very slim. And in fact, my break even is just a little bit higher than that, 180.32. So that gives me a little bit more protection. 180.32 is here. So if it closes above 180.32 on the 14th of March, then I would lose money anywhere from that point above. But if it doesn't, then I'll be making money on this trade. So it's one that makes sense for me, not from the perspective of price action, but from the perspective of using the idea of support resistance. We're going to be selling this 180 14th of March, selling a call. CAD. And then we're putting in our other position, which is I'm going to sell a put at 173, right around here, 14th of March. Now, the reason for selling the put is because when you're selling a put, you're having a bullish view on the instrument that you're trading, which is what price action is telling me. 173 on the daily chart is right here. Where's my ticket order? There we go. So 173, and in fact, taking into account that I received money for the trade, 172.63 is my break even. So as long as price can hold above 172.63 right here on the 14th of March, I'm gonna be fine. And I think there's high probability that would happen. It might well not be the case, but given what price is doing, I think it will be a good trade to have. So 173, 14th of March, we're selling that. options trading is all about weighting up your analysis on the pair and looking at the prices that the premiums are going for. There's very little technical analysis you need to know. What you do need to know is how options market works and the way selling and buying options, as well as how to actually manage your trade, which is what I'm still learning. British pound, Swiss franc is the next one. And this pair is bearish according to my analysis. The past 3 weeks has seen sellers in control. I'm going to put only one position here, and that's a sell call at 133. So 133 up here. On the daily chart, it will be right here. So just above this peak here. Cash. So it's sell 133. For this one, I'm looking to cover at 134. And I will do that as soon as price becomes available, if it becomes available. In the world of option trading, if price becomes unavailable in the area that you have a trade or you're looking to put on a trade, it's a good thing if you're in a position because it means the market is moving away from that area. And as a seller, that's what you want to see. You want to see prices and volatility turning away from the area that you have your position in, because then those options that you sell will become worthless. So you keep all of the money that you make from selling that option. British pound, Japanese yen. Despite this pair dropping quite significantly in the last week, overall it's still trending up slightly, but it has been a very slow grind up. And right now, my analysis is telling me that it could possibly be in a range for the next 4 weeks. So when it's in a range, we're going to be selling out of the money options, trying to trap it. We're going to sell a put at 146. Wait, no, that's the wrong one. No, that's right, 146 put down here. I wrote it backwards on my note, and sell a call at 154. So 154, that's where I'm selling my call. And 146, which is all the way down here. It's quite a lot of protection, because on the weekly chart you can see that there is support level right here. It was acting as resistance, and then when price broke above that, it was acting as support. So my theory is that support should be able to hold up at least for the next 4 weeks anyway. We're looking to sell a put at 146. Interesting. When I did my review, 145 was not available, but now it is. I wonder why is that. Initially, I wanted to take 145 because 145 would bring it below this band. You see these two blue band here, these are volatility band. These tells me that the probability of price closing outside of this is very small, less than 5%. So if I'm selling options, I want to be selling options as close to these two lines or outside of it ideally. 145 was not available just an hour ago when I did my analysis, but here it is. It just come up. So 146 would put me here. Actually, 146 is actually outside the band too, and 145 has now become available. So I need to just quickly run through my numbers again to see which one makes more sense. Let's look at the call side. Selling a 154 call. So 154 call would be just right here. You can see on the daily chart, as price was dropping last week, it did make a push up, but again, sellers push it down. So this could be a good sign that there is a lot of selling pressure still above 154, and that tells me that it makes sense to be having selling a call from there. So we'll do that first. 154, call 14th of March, and selling that. So this is British pound, Japanese yen. Okay. Right, let's go back to this 146. The band is at 146.38. Call it 146.40. So 146 is close. 145 is better. You know what? I will take 145 simply because the further out it is, the less likely the options will expire in the money, which is what I want. I want it to be worthless because I'm selling these options. So we go for that. 145. I'm gonna make a note on my diary. 145. We changed that. Oh, come on, go back up to 150. Yeah, no, it doesn't matter. There we go. Would have been nice to get a nice round number there, but doesn't really matter. 2. Cable is the next one. Definitely in an uptrend, at least for the last 2 or 3 months anyway. And last week there was a pullback, but now price is actually going up again. 141.41 is where it is at the moment. I don't have real life data with Pro Real Time simply because I don't need it. So that's why you don't see these prices moving, because this is end of day data and this is end of week data. So these are not live. For this pair, we're going to be selling a put at 137. On the daily chart, 137 is down here. So I'm going to be selling that. And my break even is 136.80. So I want to see price finishing above 136.80 for this option to expire worthless, and I'll make profit on that. I also have noted here that I can sell a call at 146, and the reason for that trade is because going on the weekly chart and zooming out, this area here between 144 and 146, historically back in 2016, just 2 years ago, has proven to be quite choppy. So there could be a messy period around there. So when price is going up, if it continues to go up, it might get trapped there for more than 4 weeks. And the idea is that if that's the case, then I can actually make money selling a call at 146. So on daily chart, 146 is right up here. Let's have a look at what price is available at 146. So this is a call option at 146. It's worth 19 USD at the moment. That brings it to 146.19 is the break even, right about there. If I wanted to, I can do this trade. It's very tempting for me because just looking on the daily chart for cable, recently it has been making lower lows. So it made a push up, that's the high, and then one low, lower high, and just last week it made a lower low. So it could be just doing a slight pullback at the moment, which would support selling a call at 146. I think I would do that, 146, because I did make my analysis already, and when I did it, there was a case for it. So selling 146, 14th of March. And the last pair that I'm trading for the next 4 weeks is New Zealand Japanese yen. On weekly chart, you can see this pair really haven't actually moved very far at all since 2016, December 2016. It's been trapped between 84 and 75. This is a perfect pair for option sellers to be trading in last year. You could just sell calls above 84 and sell puts above 75, and you'll be making money every single step of the way. I'm late to the party because I didn't know about options trading last year, so let's hope it continues at least for the next 4 weeks anyway. I'm gonna sell a put at 75, and I was thinking about selling a call at 81, but then I decided not to because prices was too cheap for it. So we'll do the sell call first. Now 81, there are no prices above 81 at all for the next 4 weeks anyway. I would prefer to take 83, 84, even 82, because that would put it above the high that this pair made just back in January. But 81 is the only option, and if you look at the price here for selling a call on 81 14th of March expiration, it's 200 yen, which is barely any money. So the risk that you take to sell an option there to make 200 yen is completely not worth it, and that's why I scrapped that side. Looking at the put side, you will see that it's a much more convinced number. So here we go. I'm selling 75 put. Put it here. 75 is below the volatility band that I'm looking for. So that ticks that box right there, and it's also below this low here. So there's extra distance. This could be acting as support that could hold price up for the next 4 weeks. Selling an option at 75 just makes more sense than selling a put option at 81. On the daily chart, 75 is all the way down here. So there's quite a lot of room for protection. We do that. I would cover this at 74.50 or 74, but again, prices is not available yet because it's too far away from current market. So that's going to be on my to watch list, and I'll put that on as soon as it becomes available. So we're selling one, yep, much better price as well than 200 yen. This is worth 1,010 yen, worth 5 times as much as the sell call option, and it's further away. And that is it. That's all of my trades in. I'm just gonna have a quick check on my trading platform if it hasn't frozen on me already. Yeah, the trades are not showing up as yet, so probably tomorrow it will show, because I'm not seeing anything on my trading platform. Right, so this has been my live trading video, so to speak, of all of the options trade that I'm making for the next month. Expiration is 14th of March. Thank you for watching, and I will see you in my next video.